Hi, and thank you everyone for joining us again on the second panel. So, moving on to this discussion, we will talk about the digitization of SMEs in Tier 2 and 3 cities as the key to boost national economy. Today, we have Iwan Kurniawan, co-founder and CEO of Modalku, Steven Sang, founder and CEO of Gudangada, Arif Tirta, co-founder and president of Evermos, and Andri Ngaserin, director and head of Indonesia Research of Credit Suisse. The discussion will be moderated by Andi Haswidi, head of research at Deal Street Asia. Similarly to panel 1, if you have any questions, you can post it in the Q&A box, and we can address them at the end of our panel for a few minutes. Now, I'll pass it on to Andi for our panel discussion.
Hi, good day, everyone. I want to give a warm welcome to our audience. Good morning, good afternoon, and good evening, wherever you are. I'm Andi Haswidi. I work for the Deal Street Asia as head of ASEAN Research. I will be moderating this panel in which we will be discussing how digitalization of SMEs in Tier 2 and 3 cities will play a role in Indonesia's economy. So joining me today are distinguished panelists who are trailblazers in their respective industries. Gentlemen, I think Nadia have introduced all of you, but if you can perhaps give our audience a bit of background in terms of what you do and what your companies are doing to unlock the economic potential of Tier 2 and Tier 3 cities through digitalization. Perhaps maybe Pak Arif can start.
Okay, first of all, I'd like to thank Jeff and Chandra and the entire Alpha team for the opportunity and also creating such an insightful event. Honored to be on the same panel with Pak Steven, Pak Iwan, Pak Andri, along with Pak Andi as moderator. I look forward to the productive discussion. Good day, everyone. My name is Arif Tirta, and I'm one of the co-founder of Evermos. We are a social commerce startup. Our goal is to create an inclusive economy and prosperity by giving access, opportunity, and also training for individuals and small medium enterprise so that they become financially more independent. How we do that? Evermos, we connect brand owners, mostly SMEs, and all of them are local brands, to reseller and then to end consumer via our platform. We are a 2 years old companies. Currently, we have over 5,000 productive resellers located in all 34 provinces all over Indonesia. The majority of our resellers are female. They live in lower tier cities. Over 80% of them living in the Tier 2, Tier 3, or Tier 4 cities.
Great. Pak Steven Sang, maybe you can tell us what you're doing with the Gudangada.
Yeah. Hi, good day, everyone. Thank you for the opportunity to meet here. So I found Gudangada at 2019. Actually, the idea to fund Gudangada actually, I want to empower the traditional traders, actually the GT, because I see the whole supply chain for the B2B in Indonesia, mostly especially on the FMCG and staples, is run inefficiently. All of them facing the challenge of the increasing of the cost, operating costs, and declining on the productivity. And this industry actually untouched by any technology before. This is how actually Gudangada is a B2B e-commerce marketplace platform, connecting manufacturer with traders and also between traders, both the wholesaler and retailers. So we aim to empower the whole GT supply chain to help them to transact in faster, cheaper, smarter, and bigger way. Today, we are onboarding almost 300,000 users all over Indonesia, and 2/3 of our merchants located in the Tier 2 and Tier 3 city, because the GT market is still very strong, especially in the Tier 2 and Tier 3 city. This is how Gudangada try to tap into this industry, empower all the players in the supply chain. Thank you.
All right, Pak Iwan, I think when it comes to SME, the issue of financing always pops up, right? Can you tell us what are you doing?
For sure. So thanks again for the invite, Alpha JWC, as well as Deal Street Asia, and good to meet all of you. One of the co-founders of Modalku in Indonesia, also known as funding societies in Malaysia, Singapore, and Thailand. We provide financing to SMEs who are underserved or unserved by the banks. Right? And over the last 5-6 years, we have given out 1.5 billion or more US dollars of financing, right, to SMEs across Southeast Asia, of which majority of that is in Indonesia, right? The pain point that we're solving for is that the majority of the SMEs, we have almost 60 million of them in Indonesia, have not received their first loan before or for productive purposes. And hence, we want to help them achieve more growth in their businesses and experience support from a financial partner like us, right? And over the last few years, we have done that quite well. We provide also financing to merchants or suppliers, distributors in Tier 2 and Tier 3 cities. So look forward to contribute more to the discussion.
Thank you, Pak Iwan. Pak Andri, what's Credit Suisse doing? I mean, I'm sure you're advising a lot of companies on, Tier 2, Tier 3 cities challenges and penetration issues. Let us know.
Thank you so much, Pak Andi. I mean, first and foremost, just want to thank you, Alpha JWC, for providing this platform. Very honored to be with distinguished entrepreneurs here. Jadi, for Credit Suisse itself, they have been around since 1990s, right? Probably among the longest global bank to be around in Indonesia. The basic of it is to provide access and insights to the capital markets, and also to family offices alike. So there are quite a lot of presence of these corporates and family offices within the Tier 2 cities too, right? So whenever people do want to switch ideas with us with regards to corporate finance or just business direction, the Credit Suisse typically provide that. So I've been there since 2018 and been doing this for about 13 years or so.
Okay, great. Thanks very much, gentlemen. So I don't know if you guys have read the report yet, but one of the big findings from the Alpha JWC and Kearney report is that consumer demand in Tier 2 and Tier 3 markets will drive the growth of e-commerce and e-payment, which are expected to grow annually at about above 20% in the next 5 years. So one of the key foundation, arguably was laid out in 2020 when we saw rapid digitalization of human activities, businesses as a result of COVID-19 and mandatory health protocols, obviously. So some experts have even argued that the pandemic has accelerated digitalization by 5 years. So I want to separate the myth and the reality here. Can you please give us a view into your world and tell us how digitalization has shaped your business in the past 12 months? Maybe we can start with Pak Stephen on this one.
Yeah, thank you, Andy. Actually, if you look at the industry, when we talk about the Tier 2 and Tier 3 city, actually, it is very important because the Tier 2 and Tier 3 city contributes 60% of Indonesia economy, especially when I talk about the GT industry. This is how, when I look behind, when I still in the industry several years ago, the thing totally have already changed. I think some of the drivers should be because of the technology side. When we said the 5 years ago, we weren't able to see that in the market, people or the traders stocking up their store digitally using e-commerce platform, and we weren't able to see this kind of thing in the Tier 2, especially on the Tier 3 city. But I think the last 2 years, and especially last year when I went to the market, we think things have rapidly changed. More and more people are relying on digital solution for their business. This is how also I think several issues. First, because the mobile phone, even the smartphone, are more affordable now because the price is getting cheaper. So more people can afford to buy the smartphone. And also, secondly, it's also driven by the government policy. to have a big role on this, how they also actively creating program to provide everyone in all city with a better internet access. This eventually will help its city economic growth. And one of the program, I think that really worked for them when we see the Internet Masuk Desa was launched 2 years ago. That's what I see what already rapidly change in the market, and coming to here, everyone already almost do the transition to the starting to do the digital.
I see. What about the adoption of your app? What's the progress in 2020?
Yeah. So let's see. Good and other actually, because I come from the industry, I know that these FMCG traders, especially on the GT, is not a tech savvy. This is how good and other apply the combining human and tech approach on our go-to-market strategy. We have around 800 people, business development team. So this guy actually go to the market. They come from the industry with a strong background. So this is how they do the introduction, education, and also do the journey together. This is how we slowly, after 2 years, then the tech adoption keep increasing actually through our education, and also slowly we also tap into the third tier city. This is the hardest one because the third tier city is very left behind. But through the education introduction, it's more actually.
Okay, Pak Arif, just beyond adoption of your application, what sort of trends that you're witnessing in the past 12 months in terms of digitalization for FMOS?
Okay. So because of the COVID-19, we noticed that I think there is a shift in the market in terms of the type of product that they purchase, and also the channel to get the products. When COVID-19 hit Indonesia in February to March of last year, which is very close to Ramadan, historically during Ramadan we would see a huge spike of transaction on fashion, especially modest fashion. But for last year, we didn't have that spike. Instead, we see a spike on the COVID-19 prevention product, health and herbal, along also with the prayer equipment. And then we see also another changes at the end of last year. We also see a significant increase on home living related product. Perhaps we started to realize that we would stay at home longer than we had anticipated. But if we fast forward to today, we see that modest fashion started to pick up again, and we expect, I think, it will reclaim its throne as the number one category during Ramadan.
Okay.
For FMOS, I think similar to Gudang Ada, we're focusing on empowering and not businesses. We're focusing on individuals. Not FMCG. We're focusing on everyday need. But in the nutshell, we are very similar. We are trying to empower individual, trying to connect a non-tech savvy individual so that they can have access to digital transformation and the digital economy.
Great. Thanks, Pak Arif. So turning on to you, Pak Iwan, almost all P2P lenders that I spoke to last year, at least they said they're avoiding consumer loans, but they're doubling down on investing in productive loans. At least that's what they say. Obviously, this is a sector that you're focusing on. Can you tell us what happened in the past 12 months for Modalku, for productive loans in general?
Got it. And overall, thanks for the question, Pak Andi, right? Very, very good question. Overall, we grew. We doubled our loan count from 2 million to 4 million in a year. We grew our book. At the same time, our defaults remain stable between 2019 and 2020. I think a good way to answer your question is to first answer the question of who are our users? Why would they use peer-to-peer financing as opposed to a bank loan? So we did a survey recently with a third-party vendor, DS Innovate, and with the survey that we did, what we found out is that 72% of our borrowers applied for a loan for their business for the first time ever. And 50% of these applicants or people who already borrow from us are millennials, which means they're below 40 years old, right?
Okay.
And what's interesting is that of these people, around 50+% do not have university education, right? So what's interesting, I think, is that we are offering a solid alternative, right? Whereby if the old generation are used to going to the bank and knowing that if they don't have collateral, they don't have good financial statements, they do not have, let's say a very big business, that they might be rejected for a loan. We're offering a solid alternative, right, for them who do not necessarily have proper records of financial statements, no collateral, and so forth. And we saw that in just 1 month in March, in 2020,
This year, last year.
last year 2020,
Okay.
the number of people who come to our website jumped 20 times in just 1 month, and that was the beginning of COVID-19. And that shows you the hunger, the demand of
Which bring risk as well, right?
SME loans. Obviously, we did not approve most of them, given that many of them are obviously not in a good condition. But we tried our best to approve those that we believe are creditworthy despite COVID-19.
Okay, I would love to get my hands on the survey results, but maybe later on.
For sure,
Okay,
Pak.
Pak Andre, maybe from a more bigger picture point of view, there's definitely some nuances in terms of how digitalization has shaped businesses during the pandemic, as we have heard from our panelists. Can you give us like a bit of a macro perspective how digitalization, as everyone thinks that it has become more accelerated last year, how has that influenced the economy?
Okay, sure. I guess one thing to your point on digital acceleration, right? Just for a perspective, is that prior to 2020, the acceleration has always been happening, right? And in 2020, something major happened which accelerated that by a couple of years, right? And the drivers to those still remains to till. The driver of those still remain till today. We're talking about average speed of internet users increasing, a continued investment in 4G base stations for the telco players, right? Cost of internet, it has gone down from. Can you believe it that 5 years ago the cost of internet was about 20,000 per gig? Right now it's about 6,000 rupiah, right? And as much as 10 years ago, this number was higher as well, right? And phone installments was only popular over the last to 4 years, right? So 5 years ago, to get a phone installment is not that easy. But at the moment, you can get a good smartphone, Oppo, Vivo, Samsung, right, at 200,000 per month, right? So all those structural trends continue to evolve, and we see similarly in the different countries. At the same time, consumer adoption, we can see all these active social media users, active internet users just increasing. These are all known trends, right? But with regards to 2020, right, I think one factor that really stood out, right, and I would like to quote William from Tokped. I was listening to his speech the other time, right, is that Indonesians unlocked their power of being kepepet, gitu. So what kepepet in what way? It's in one way is the need to generate more income, right? While times are tough, you need to generate more income, right? And at the same time, while you have nothing much to do, you look for alternative online, right? So one of the biggest inertia to adopt things digitally, it's perhaps, and this is true not for not just Indonesians overall, but globally, is changing our habits, right? How do we move from something like transferring cash to a typical Alfamart, right, to actually adopting mobile banking, right, or buying goods, believing that they will reach us, right? So there's a lot of inertia every single year. But in 2020, people are being forced to embrace this, right? So I mean, the data are available everywhere. Like mobile banking transactions by some of the large banks are up about 50%. The app Any trackers suggest a rise in e-commerce and all that. So yeah, probably it was a pivotal year for 2020 to accelerate all this adoption.
Okay, so let me follow up that question, Pak Andre. Obviously, when we talk, about rapid adoption during the pandemic, it's not just about the number of app downloads, but we're also looking at usage, frequency of use, and how this will sustain going forward. In this respect, household income and discretionary spending obviously matter a lot, right? So, how do you expect these two factors will evolve in tier two and three markets? How has the pandemic altered the trajectory of discretionary spending in Indonesia?
Okay, so those are like two parts, right? So when we talk about income
Yeah.
and discretionary spending, which is interrelated, right? One context needs to be
Yeah.
known first, right? Indonesia actually has among the slowest discretionary income growth over the last 7 years, from 2013 to 17, right?
Yeah.
So thankfully, right, the reasons behind this last 7 years slowdown is probably not going to be repeated over the next 5-10 years. I mean, if external factors supports it, right? So last 7 years, what has happened? A large slowdown in spending with regards to China, right? As well as which resulted then to also a currency drop from 9,000 to 14,000. If you recall, back in 13 and 14, right? So
Yeah.
during that period, a lot of our imported goods goes up, household spending is down, right? And then we have trade war, right? And then we have pandemic, right? So with this recovery, it forms somewhat of a soft reset, and government has reacted really well. I mean, we look at the amount of vaccination. Last month, it was like 30,000 a day. We are doing 400,000 a day. Now, the supply of vaccine up to $150 million for the next, 150 million vaccines over the rest of the year are more or less secured, right? And we talk about forex reserves. When last year during March, when the rupiah went to 16,000, it was really scary for all of us, right? But back then, Bank Indonesia, which an entity that we always talk to them, right? They're far different now in managing it versus 2013, right? Forex balance is much higher. The capacity to manage forex balance, from forex balance is about 138 billion. Just a soft number. It doesn't mean much to the broad audience, but to us, it's a pretty comfortable number, right? So to that, right, the next 7 to 8 years versus the previous 7 to 8 years also has one major change. That largest change is actually from the mindset of the government agents, right? From thinking of growing just from Indonesians can grow by themselves, right? So we do things just by growing our SOE, whatnot, and all that, right? Which was a good mindset back then, right? We tried that. It did not work out super well. But if you look at Omnibus Law, if you look at invitation to invest, the idea is, okay, how do we create more jobs? Yes, we are lacking this expertise. How do we invite this player, that player to work with us and create industries, right? So if all these are executed well, I would probably say tier 1 cities and especially tier 2, 3 cities which are benefiting from this industrialization place. And one good case, which I'm not going to elaborate here, is the area in Sulawesi, right? Which is there's a lot of nickel projects over there that creates jobs, right? So that's just one small example. Sorry, it's not a small example, but it is just one example. But presumably there'll be many more that's coming in terms of job creation. So to me, that's extremely encouraging. That's very different from what's happening 7 years ago. See, so income spending probably will be generally optimistic, barring any unforeseen circumstances.
Yeah. So if we look at 7 years ago, let's say just prior to 2012, when we still had the commodity boom, and that I think drive a lot of growth in tier 2, tier 3 cities, right? And now we're sort of like expecting another cycle of commodity boom. Obviously, different commodities right now. Are you expecting that? Are we gonna ride the next cycle of growth driven by commodities?
I wouldn't just link it to commodities. Commodities is definitely one good factor, right? And the thing about commodities is that it's very hard to predict, right? And we hope that there is a general theme of decarbonization. If the world is moving more towards renewable energy, that means we probably need to use more copper and nickel. Nickel, we have copper up and coming within the next 4-5 years in Indonesia. There are a couple as well. But we can never just rely on commodities per se, because commodities by its nature is cyclical, right? So a country that rely more on innovation, such as China, or cost leadership, such as China as well, and or just very creative entrepreneurs and innovation, such as US, right? I mean, these can lead to structural trends, right? So that is where the good part is. I mean, of the fellow entrepreneurs here, they are creating trends that might keep growing and might be creating more jobs, right? So I would probably put my money more on these trends, especially the tech wave, right? Which is really enabling a lot of masses to do things that they could have never have done before, enabling a lot of SMEs to do business better. So yeah.
Right. So switching gears a bit, infrastructure development. So definitely it plays a decisive role in terms of enabling entrepreneurs and consumers, right? So we have seen how the government infrastructure budget doubling to above 400 trillion, I think, right now. So, and as Pak Stephen mentioned before, we have seen initiatives such as Internet Masuk Desa and other similar programs, right? So, Pak Stephen, I mean, you deal with logistics on a daily basis. What tangible results have you seen, and benefited from infrastructure development in the past few years?
Yeah, yes, the road development and also this combining with the smartphone penetration, which is some data show that at 2025 there will 90% the smartphone penetration. So this is how also accelerate even faster the whole supply chain to the tier 3 GT actually. So it being more easier for the logistic and everything to tap into the tertiary even in this we call it as rural area or something like that. So in the future, what I see that will be an equal distribution and all that result equal availability and also equal pricing for the good at all area. Because today, if we look at some area, the product FMCG product is very short life cycle. So sometimes it takes two months to get the product in some area, and the price can differentiate about 10 to 15%. This is how in the future when the infrastructure and everything well developed. This is how I see that will be equilibrium from the distribution side, availability also on the pricing. That's what I see that will happen in the future.
I see. Are you already witnessing some leveling of pricing, in tier 3 cities relative to tier 1? Is that already happening?
Starting to happen. There's still a differentiate around 5 to 10% and on some area, but I think slowly it go to equal. Yeah.
Okay. So, Pak Arif, your business is, somewhat similar to Pak Stephen in a sense that you rely on resellers to distribute products, right? Can you tell us some of the remaining bottlenecks, despite some of the progress that Indonesia have made in the past few years? What needs more in terms of what needs to be done? What's more?
Okay. I think we're lucky to have a vast country. Unfortunately, the development among cities or area is not evenly built in terms of education, internet penetration, literacy, and also infrastructure. For the infrastructure, I think it gets a lot better right now. But in regards to the digital transformation and also digital economy, we see that people in tier 1 and tier 2 cities, they have much better access to the one in lower tier cities. We at Evermost, we position ourselves on how we can serve people who live in the lower tier city, so that they can get the benefit of this digital transformation. By relying on resellers who are tech savvy, they act actually kind of like as a concierge service to people who are not tech savvy enough. The reseller will basically follow the time, the location, the type of payment, so that they can bring the benefit of the digital transformation to the people who are not tech savvy. And that's, I think, how we were born.
Okay. So for Modalku, I think a large of part of your business is done through an app, right? But in terms of hard infrastructure, Pak Iwan, is there something that you want to highlight? What's the bottleneck?
Sure, I think specific to SME financing or financing, the lack of records or financial records is our biggest enemy for the second and third tier cities. And we used to serve at one point warungs in Indonesia, and one of the cities that we served obviously was Jakarta, Jabodetabek. And what's interesting is even in Jabodetabek, 40 to 50% of warungs do not have a bank statement. And the majority of the warungs do not actively transact with their bank with their bank account, right? Yeah. So in a way, if the warungs in Jakarta alone do not have a bank account or do not actively transact with their bank account, what about the rest in the second and third tier cities? So that is the number one enemy, whereby without active usage of a certain account where they can prove their credentials, that they're credit worthy, right? It is difficult to penetrate. It's difficult to go far. And that's why we work with the likes of partners, may that be the whole wave of e-commerce or supply chain partners. We focus on the SMEs who have been at least banked with a bank account, right? So it simplifies our operating model and allows us to serve and do what we can do best, which is the financing, right? Yeah. And serve the folks who are at least gone through one wave of financial inclusion, but they need the next wave of financial inclusion, which is the access to finance, which we can provide to them. Another issue, quick one, right, is obviously the poor internet connection. Nothing new, and it may sound, why is that a problem? Well, in specific to our financing products, there is often a need to upload information, upload documents. So when you type information, slower connections are all right. But when you have to upload documents that could be several megabytes, internet connections are a problem, right? So we do need, in a way, more support from an infrastructure point of view, right? From SMEs adopting more digital wallets or bank accounts, at least for their own use, for their business, as well as adopting software or adopting working with e-commerce platforms, may that be B2B, B2C, C2C, and so forth. That will allow us to help even more SMEs in Indonesia.
Thanks very much, Paiwan. That actually creates a nice segue to our next topic, which is digital payments. So I want to go to Pak Andri. What's the state of digital payment adoption in Indonesia at the moment, and how is it going to progress in general terms?
Yeah, sure. I think COVID definitely has greatly changed. Like even the large banks are reporting that branch transactions, not in terms of value, but in terms of number of people, volume of transactions, the majority is actually done through internet and mobile now at the moment, right? So I think when we talk about the state of play at the moment, it's rapidly changing. Everyone is trying to find a so-called value add in the particular banking journey, right? So payment is one of them, right? The reason why when we first use payment, it enables us to close transaction easily in e-commerce, right? Second is that we get discount, and then we adopt that QR code, easy payment, right, instead of cash, right? So those are the two things what a payment company does at the moment, and then later on attempt to go to different places like distributing mutual fund products or even go to credit scoring and the rest, right? And then next comes the advent of digital banking, right? Which at the moment there is no single pure digital bank that has properly been launched yet. We have the digital banking app of the banks, all right? BCA, BRI, Mandiri all have their own, Genius all have their own DigiBank, right? But at the same time, at least on the news and all the chatters, right, does suggest that there is a Bank Jago which is coming out, right, and a C Bank which is don't know when it's will come out. So that would be the pure player. So the more question is that can this once you have a bank inside your pocket, right, and bank you can do all these services, financial services together. I would definitely think that the state of play will change greatly, across the whole value chain, the whole financial value chain. So, and this is a trend that may take 5 to 10 years to develop, because there's some inertia that players in tier 2, tier 3 city might not be able to embrace simple things such as trust in money, language barriers, right? But all those over time probably will solve. So this is probably the opportunity to really innovate and to really be aggressive in the space, in order to 5-10 years later to be able to provide that unique value that you can be better versus other competitors. So I'm not sure if that answers your question, but I'm just giving a very broad overview.
Yeah, sure. So this is what I'm trying to understand, right? Some major players in e-wallet spaces, such as Gojek and Shopee, have invested in banks in the hope to create synergies with their ecosystem. Obviously, at the same time, we also see how banks are ramping up their digital banking offerings, as you said. So all these developments have made the customer onboarding process easier. Just given this background, perhaps my question is to the two e-commerce players here, to Pak Arif and Pak Stefan. I mean, does this mean that banks will strengthen its foothold in e-commerce as opposed to other alternatives such as e-wallets, or do you think this distinction between e-wallet and digital banking is so blurred that this question is not really relevant? What do you think? Maybe Farid can go first.
Okay. So for us, since we have a reseller and we use a reseller as a concierge service, the consumer who are not tech savvy, they typically would just give the cash to the reseller. The reseller will place the order on behalf of them. And then for the reseller, and then for the consumer who are tech savvy enough, and then the reseller who make the order on behalf of the consumer who are not tech savvy, their preferred type of payment would be bank transfer. So I think in the lower tier cities, I think cash is still the preferred way to do business.
But for the resellers, they would definitely use bank transfers, right? And this would be, and you think this will be the norm in the next 5 years as well, right?
That would be my belief, yes.
Okay. How about you, Pa Stefan? Do you think the bank players will maintain their strong foothold in tier 2, tier 3?
Yeah, I think for the tier 2 and tier 3 GT, most of the traders, general trades, still do the cash payment actually, or some of them use the Giro or check payment. So this is how actually this is also one of the homework we are working on. There should be some payment solution or whatever we can do. That's where we are working and talking with some bank how to find a solution, because all the transactions still happen in cash and also some in the Giro or something like that. There's a lot of homework, but there is also a final opportunity for the financial services we can explore to give a solution actually on the financial services actually.
Okay. Let me get back to you, Pa Andre, on this topic of digital banking. Is Indonesia going to follow Singapore, Malaysia, and Philippines, where there is a specific license for digital banking services, right? I ask this because the Monetary Authority and OJK obviously have been trying to reduce the number of banks, conventional banks in Indonesia, and thus opening new application does not really add up to that goal. So we have more than 100 banks in the country right now, and adding more would be counterproductive in terms of ensuring that local banks are well capitalized. What's the development is going to be? Are we going to have specific license, or are we happy with the current status quo where you can acquire a small bank and operate a digital bank?
Thanks. Thanks, Pa Andi. That's a very good question that even the digital banks are discussing about it at the moment with the central bank. At the moment, the central bank is actually getting feedback from the various banks. Should we have a pure digital bank license, right? But the thinking is that at the moment, most of digital banks are run through traditional bank. You don't actually, if you are a BCA, you launch a BCA mobile, and there goes your app, right? But that's but separate from that. Right, it's you have 107 banks. Do you want to introduce another 10 digital bank licenses, therefore making it more competitive? Right. To your point, right? It's we have so many banks, and over the course since 1998, the government policies, and that was a traumatizing event for a lot of us, right? The government policy is really to make the number of banks smaller, and the reason lesser. There are many reasons to this, with all pointing towards avoiding systemic risk. Avoiding a difficult to control situation when there is NPL cycle, or what we call NPL cycle. E1 will be very familiar with that. Once we see a spike or on default that cascade to others, but we are not able to touch point with the banks, right? So if you have stronger banks and smaller industry players, that arguably to make an industry competitive, right? You don't need to have 100, right? You have 20, you will still be competitive, right? My suspicion is probably we will not need digital bank licenses, although I don't have a firm conviction on this, right? Because it's ever changing dynamic topics. Yeah. So yeah, I would definitely agree your point.
Okay. So, Taiwan, what does it mean for P2P companies? This advent, this rise of digital banking. So the assumption is, they're going to be more advanced in terms of their offerings to, customers. Do you see this as a threat? I see a lot of P2P players are, trying to join in, basically, acquiring banks to expand their business.
Sure. If we decouple banking service, there are many parts to it. Right, and the biggest difference between what a bank does and what a lender does is that the bank can collect deposits and facilitate payments between companies or consumers. Right, so for a number of P2P companies, for sure, the next destination is to either be strategically aligned with the bank, or to acquire a bank, or to co-own a bank. Right, there is definitely some talk among players that I know. Right. But there are some that believe that they don't need to do that because in a way they have a very strong financing product, a very strong lending offering that is in itself sufficient to grow without having access to bank ownership, because you can still access a bank service without owning a bank itself.
Okay.
So there are many different ways to work with the bank. You don't have to own one; you can work with one. And the whole idea is that, hey, if you need lower cost deposits, you can always work with the bank for a lower cost of funds. I think what often people don't realize is how difficult it is to run a bank, how strongly regulated a bank is.
Strongly regulated, yes.
And how you've seen the example, let's say an example of Korea, you have a bank that is doing so well, and you have another bank that is struggling, and that could happen. And in Hong Kong, for example, among 8 licensed digital banks, majority of them are still trying to find their feet. So it is not that easy to run a bank. Hence, I think there will be some kind of consolidation. There will be some co-ownerships or ownerships. But I think the dominant strategy for most players will be partnership.
Right. So just to add to that, I think we're going to see a lot of consolidations in a P2P space, especially those obviously focusing on consumer loan. What's your insight view, by one?
Given that the number of players in Indonesia in P2P is already 150 plus minus, the number is already quite large, more than the banks. If you see more than the multi-finance companies already out there. So I see consolidation actually is already happening as we speak, because OJK has announced a couple of waves of reduction in number of registrations or licenses already. So it is going to happen. What I think a better question to ask is around, so what for the consumer? So what for the people, right? And I think that consolidation to some extent will benefit consumers, because you have the weaker players who are not as sustainable anyway, dropping out of the industry, And then you have the strong players who have proven that they can do business well, they can work with SMEs well, consumers well, continue operating, right? So I believe that a P2P license is still available because many players still want to use it for whatever the license has value for. The ease of lending, the focus on lending, as opposed to having the whole bank that you need to do lending. So I believe the consolidation to some extent is beneficial, and that you have good players focusing on their best strengths.
All right. Thanks, Paiwan. So we're already at 1 p.m. But if you allow me just to extend a little bit, so this would be my last question. When it comes to digitalization, right? So I want to talk about the adoption of AI and machine learning, and how these technologies may, further influence digitalization in Indonesia in general. So if we look at one of the most successful e-commerce companies in Southeast Asia, Shopee, the adoption of AI and machine learning plays an important role in their growth and retention of customers, obviously. Of course, Shopee benefits from the R&D of its sister company in the gaming industry, which is Garena, right? So how far behind are the homegrown players here in Indonesia when it comes to the adoption of AI and machine learning in KYC automation or other processes? Maybe Pak Arif can tell us your experience on this one.
Yeah. I think on this we are quite behind, and the main issue on this is the lack of engineering talent. Even in the more general engineering role, we still have issues with the supply. And then if we talk about specialists such as AI, machine learning, we are even have a much bigger lack of talent issues. I would say we are 5 years behind, but I think the gap can be shortened quite fast, given that we are right now living in a very fast-moving and dynamic world. I think we need to find a way so that we can pollinate with other countries that have successfully adopted, AI, machine learning in their, companies. We can get some of their talent to move to Indonesia, and then help the Indonesian talent to improve on that.
Thanks, Pak Arif. How about at Gudang Ada, Pak Stephen? Are you?
Yeah. Actually, at Gudang Ada, we also understand the needs of this machine learning and also AI. This is how, since the beginning, we already invest at the very early stage. We already invest in our data warehouse. So this is also, we struggle with the talent. That's right, very hard to get that right talent, especially for the analyst or something like that. This is how we also try to prepare the infrastructure at the very beginning, collect all the data at the very beginning. We start to build our data warehouse, and also starting to use the data. We hire several engineer and also product team, but I think we are very at the very early stage. Because we are only 2 years, we try to use the data, but of course we also try to get the access to other countries. This is how when we onboarding our CTO from XGrab, that he have the experience on building the AE and also the machine learning. So we are work closely with him intensively to also build our AE capability actually.
Okay. In terms of your workforce, right, in the technical side, how many are foreign talents, Pak?
Yeah, for now we have around 70 people on our tech and product team. There is around 7 people we put on the data side. Yeah.
I see. Okay, Pak Iwan, I assume, you should be the more advanced in terms of AI and machine learning, right? Because having a reliable credit scoring system is critical, right, for your business. So can you tell us how you're incorporating AI and machine learning into your business?
Sure, I'll show you 2 extreme views that we utilize. One of them is that we do have AI. We use that for our work in Singapore in particular, given that Singapore has a wonderful database of many financial records and non-financial records. Able to approve a loan in 1 hour in Singapore for a month.
Okay.
On the other hand, Indonesia, I think what we need is not necessarily AI sometimes, but it's good product management. It's good understanding of how to grow in this environment. And what we find is that when the problem with your consumers or your customers that they don't even have the sufficient data to give you, don't even have the right structure or format of data to give you, then is it AI that is what you really need right now, or is it something else? And that's something else that we have been looking at or have been working on are things like gamification. In a way, looking at the borrower in a way, you know what, given that you have an okay record in the past, I'm going to give you something, but prove to me that you can use this money well, and then I'll give you more money over time, right? So in a way, that in itself is one workaround that we have, that when borrowers do not have the full data that they want to give you right away, or they don't have the data anyway, right? We can use something else to work with them. And also sometimes giving you all the data is slow. It takes time. It reduces your turnaround time. It doesn't give the borrower what they need today, right? So I think just good product management, understanding the pain points of the customer, what they don't have, what they have, and being able to grow with that constraint, I think it's what's really important most of the time for Indonesian context.
All right. With that, I think we have to end our discussion. Gentlemen, thank you so much for your insight. Thank you, the audience, for joining us in this discussion. I think from the panelists, we have learned that there's plenty of work left to be done in terms of unlocking the potential of the tier 2 and 3 cities. But there's no real time frame for this. It's a process that is continuous in nature, with lots of iteration, new technologies along the way, right? And one thing for sure, however, the fundamentals of for people market penetration in Indonesia remains intact despite COVID. And indeed, the 2020s, at least in theory, is expected to be a golden period for Indonesia. Thank you all panelists and everyone. It's been great.
Thank you.
Thank you.
Thank you,
Thank
Pandi.
you so much to Mas Andi for moderating.
Thank you.
And also Pak Steven, Mas Arif, Iwan, and Andi for sharing your insights with us today, right? We hope that the panel discussion had enriched our learning experience about the opportunities beyond the big cities of Indonesia and provided even deeper understanding about how digital solutions are elevating the quality of lives, both for consumers and also SMEs in these cities. So for our guests, we are now at the end of our event. On behalf of Alpha JWC Ventures and Kearney, our esteemed partners Credit Suisse, AWS, and Xiaomi Indonesia, I would like to thank our audience for joining us and participating in the discussion. Over the course of a few months, we will have more events related to our report and share the relevant insights through our social media. So I would like to encourage everyone to follow us on LinkedIn or Instagram to keep updated on any upcoming activities related to our report. You can also download the full report on Alpha JWC's website, alphajwc.com/report, or Kearney's website. For our guests who are joining via AirMeet, the networking lounge will be open until 4 p.m. Jakarta time, so you are welcome to mingle with other guests. And for our friends watching on YouTube, the recording will be ready shortly, so you can catch up if you miss any sessions of the event. Again, thank you so much everyone for joining us today, and we hope to see you in our next event. Bye-bye.
Bye-bye.
Thank you.
Thank you.
Pak Stefan, Pak Arif, thank you, Pak Iwan, Pak Andi.
Thank you.
Well, next time.
Thank you, Mas Andi.